I hope you've been enjoying your summer, but wanted to give you a quick stock market update here for August. August traditionally has been a rougher month for the stock market. We call it short sellers month because a lot of times the people aren't on Wall Street, they're off on vacation, so certain people try to drive the market down. But this year we have not seen that up to this point, but we are still in the middle of earnings season. So you might have seen individual stocks, however, more recently going up and down in extreme fashion, extreme volatility. So a stock will be up 10% one day and then down 12% the next, and so on and so forth. The reason why this is happening is because the uncertainty of whether these companies will be able to keep up with the extreme earnings expectations that they have. So you might remember back in January when I did the state of the market for this year that I talked about reversion to the mean and basically that the stock market is expensive, right? The stock market's expensive. However, the stock market won't be expensive if we can continue to see companies' earnings rise at the levels that they are. And to be honest, this July has been stunning with the earnings reports that we are seeing. Just recently it was reported that 88% of companies in the S&P 500 had published their earnings for the quarter. And on average, the earnings were up just over 50%. This is absolutely incredible. Averaging 50% returns. We do expect that the last few companies might bring it below 50, but that's still just an amazingly huge number. So really what that's done is that has justified these very high valuations that companies currently have. So this is a very good thing because it makes these companies cheaper. However, we're still at the point where expectations are extremely high and earnings are going to continue to need to grow at this rapid pace for everything to continue. Now, much of this is based on AI and the changes in really the way we will live our lives into the future. So a lot of this can be very hard to kind of picture into the long run. But I saw a Stanford video recently regarding AI that's a little long, but if you're interested, it's about 55 minutes long. We will post a link to it below. But it really is a good explanation on what some extremely intelligent people in Silicon Valley are expecting for AI and its impact in the long term. So AI is real. We are starting to see a lot of the benefits, but there's still a long way to go and a lot of struggles along the way with privacy and cybersecurity and all these different types of things. So it's not going to be an easy ride, but truly, it could be remarkable what ends up happening over the next 10 to 20 years with technology. So, wanted to give you that August update. We're very optimistic because we've seen so many companies have such terrific earnings reports. But of course, we always need to remain cautious because if we see chinks in the armor here, we could see the market reverse pretty quickly as well, if these earning reports don't hold up. So, the premise for the year is pretty much playing out as I had anticipated in January. Basically, reversion to the mean is what's happening, and the terrific earnings reports are keeping us on track, which is a great thing. So, hope you're enjoying the summer and enjoying the profits that we're having just in our investments. And if you ever need anything, feel free to give us a call. Thanks so much.